afternoon. But I can see this is obviously a subject that is of great interest to a lot of people. So thanks for joining us today. For those who don't know me, my name is Andrea Reynolds and I'm CEO and founder of Swoop Funding. And Swoop Funding is essentially a platform where businesses can come on, build their profile in a couple of minutes, integrate their cloud accounting, etc., and see the funding that you are eligible for where you're at in your stage of your business journey. One aspect of that is grants. So we show you loans that you're eligible for, investors that would be interested in your business, and of course grants. And the reason we show grants is because it is such an important part of the makeup of your capital journey as you grow. It's been an incredibly important part of Swoop's journey. We wouldn't be where we are today without grant funding. And so every time we have something that works for us, we love to share it with our community. So we are absolutely delighted to have Tom Kennard from Granted Consultancy with us today. We are here to talk about how we can help you unleash your business potential through grant funding. Tom and Granted Consultancy have been an amazing partner of Swoop, and we are delighted that they've helped many of our customers achieve great success in the grant landscape. And I suppose lots of you are sitting there thinking, how on earth do I navigate the grant landscape? The universal theme we hear from our business customers is that it feels like a dark arts. It feels like, oh, I've got no chance of winning a grant. And unfortunately, that is a myth that we're seeing all the time. So I'm glad Tom is here to debunk that today, because despite the billions that the government set aside for grant funding, only over 70% of businesses have never applied for a grant. So I would say thank you for joining us. I think this is a smart use of investment of your time for 1 hour to finally demystify that. And Tom, I'm delighted to hand over to you. I'd say just to let everyone know, Tom's going to take us through a fantastic whistle-stop tour of the grant landscape. And then do not worry, we're going to leave plenty of time for Q&A. So if something pops into your mind as Tom is going through his presentation, or you've come on specifically to ask a question, please pop it into the Q&A and we will make sure that we get around to it before we close out the session. So Tom, I'll hand over to you.
Thanks, Andrea. Good afternoon, everybody. I think that's a very good summary of grants. They can be perceived as a dark art, but they're absolutely attainable by companies. So what we're going to look at today is how to go about that, how to demystify it. It's about having an understanding of the grant landscape and the types of projects that will be suitable for you as a company. So grants, in terms of a kind of a 101, are a really interesting way to finance your company, because you don't have to pay anything back. As long as you don't do anything fraudulent and buy a new Porsche and abide by the project that you've defined, you keep the money, it goes towards the project, and there's never a time in the future that you have to pay it back. There are two kind of main types of grants, as you can see on the screen now. There are capital grants and there are innovation grants. And the reason for splitting the two is that they focus on different areas of a business's growth. So capital grants would look at if you're buying a new premises or you're buying a new piece of machinery. And typically, because there's lower risk in those kind of projects, the amount of funding that you get, which is called the intervention rate, is typically around kind of 20 to 40% of the project cost. So say you had £100,000 cost for buying a new printing machine, you're going to employ some people on the back of it, then you'd get between 20 and £40,000 of that back. On the other side are innovation grants, which are really kind of our speciality, and they're highly ambitious projects that are looking to do something incredibly interesting and innovative and successfully commercialize that. And because there's more of a risk there, you tend to get a higher amount of grant funding. So if we took a similar kind of project of £100,000 on an innovation grant, you'd actually be able to access between maybe 60 or 70,000 pounds of that as grant funding, which means you've only got to put in 20, 30,000, 40,000 at a max, which is obviously makes the project more realizable. But because of that, it's competitive. So you've got to make sure that you have a very strong investment case for your project. And the kind of things that those funders are looking for. On the capital side, they're looking for projects that generate job growth. On the innovation side, they're looking for those really novel step change projects that are going to take the UK and its kind of research base really a significant step forward. So that might be the implementation of a new product. It might be prototyping a completely new way of doing something. It might be the integration of an advanced technology like artificial intelligence or computational fluid dynamics, for example, into an existing problem. So what you have to make sure is when you're trying to understand, am I eligible for a grant? You've got to really think about the project that you want to try and achieve, because that's what will be assessed by the funders. And funders in both cases will look at them like look at investment cases. So they'll be looking for the strengths and the weaknesses of the cases that you put forward. They'll be looking at things like the strength of your team. They'll be looking at things like the match funding that you have in place. They'll be looking at the innovation itself. So have you done an analysis of your competitors? Are you really that innovative? They'll be looking at how you're going to commercialize it. Do you have the right people on board? Have you got commercial partners that are going to be helping you to take it to market? But it's a really important and fundamental part of any business's financing mix. And I think, Andrea, perhaps it's worth just 2 seconds just on how that fits with the wider Swoop platform and other funding options.
Yeah, absolutely. I think one of the key aspects of grant funding is that it's never 100% funded through the grant. So if you're thinking of going for a grant, you have to think about how are you going to fund the other part of the project, so that basically the grant agency, if your project fits, knows that you have the financial feasibility to sustain the project. So that's why Swoop exists. We're showing you what other funding is available to you, so that you can actually prove that you can see your project through use of your own funds as well as the funding that you're receiving. So what Swoop does is it essentially takes your data sources, you fill out your profile, and so we will be showing you the results of whether it's a capital grant or an innovation grant, and we'll also be showing you the other results that are non-grant related, so you could match the two. And so this is where, once we've done that, this is where Tom and his team really come into action, where they can help you actually achieve that grant success. And it's always been an area, wouldn't you say, Tom, that and this is how we ended up conversing in the first place, was around sometimes people are really successful at winning the grant, and when it comes to proving they can match the funds, they struggle then to get over the final hurdle. In some cases, we've great businesses who are taking on private sector funding, like investment or debt, and not actually maximizing the use of that by matching it with a grant. So they very much go hand in hand. And I think that's where coming to someone like us will help. But I guess just in general, Tom, in terms of navigating that landscape, where else would you recommend our companies go to have a look at what's out there and what's available if they just want to read up on it?
Yeah, I think the one of the complexities of grants in general is the number of different funders that there are, and being able to understand each of those and whether your organization, let alone your project, has a fit with what they're looking for. At the moment, there's over 75 grant giving bodies in the UK, for example. So you've got to understand all of those different grant giving bodies. And then each of those has, between kind of 5 and 50 different grants that they're offering at any one time, which will change in terms of scope. I think on the screen now, you can see some of the key kind of funders. Probably people are aware of organizations like UKRI and Innovate UK. They're the principal UK body for this. It's worth just touching on the Brexit situation and where we are with that. So you can see on the right-hand side there, you've got Horizon 2020, which is a program which, again, maybe people are aware of. That's been replaced by the Horizon program, and UK SMEs and companies are still eligible for a number of those programs. But there's also a couple that they're not eligible for. And so UKRI and Innovate UK have been given a significant amount of funding to fit with the government's aims of increasing our percentage of GDP that is spent on research and development projects. So I think first port of call, if I was looking at from scratch, would be to look at things like the Innovate UK site, but also to go to the Swoop site, because that will make sure that you've got that tailored answer to your questions about your project, about whether it's going to be grant fundable or not.
Yeah. And that's such an interesting point on Brexit, because again, it's another theme that comes up with our business customers. And I would also say, so there's regional grants, there's innovation grants, and within the regional side of things, people might be noticing that there's a petering off of regional outside of COVID grants, and that's because again it's related to Brexit, where we would have traditionally had European regional development funds going into the regional growth hubs. That's now being replaced, similar to the innovation side. That's now being replaced by the Shared Prosperity Fund, which is the UK version of that. That is only getting into its infancy now in terms of how they're going to distribute that, and the government is going through lots of surveys at the moment to find out how to distribute regionally. So we will see more coming on board on that side of things towards the sort of the second half of 2021. So that'll be another area that you can start looking at. And I suppose, Tom, one of the other questions we get asked a lot is, can any company apply for an innovation grant? Like, how do I know if I'm a good fit for an innovation grant?
Yeah, it's a really good question. It ties in as well to a couple of the questions that people have asked, one from Anthony and one from Tony as well, with regard to the stage at which a company needs to be before they can apply. So generally, most companies, particularly SMEs, can apply for most grants. There will be further kind of caveats there about, you might need, for example, a consortia to be established. You might need more than one per organization. This was much more prevalent in the European funds under the Horizon 2020 program, where you had to have a certain number of applicants from certain countries under some of those calls. With the UK funds, that's less of an issue. With some of them, they have, as you can see some examples here, if you're going for a kind of a smaller amount, in this instance, kind of 500,000 maximum, you can apply as a sole SME. You can also apply potentially as a social enterprise. There's another raft of different funds that are available to charitable organizations as well. So it depends on your designation as to which type of funding you can go for. And then typically when you're going for the larger funding, as the second example here, where you're looking at maybe 700, maybe up to a couple of £1 million project costs, then they're looking at you generating this consortia. So you might be using it to secure a partnership with a university, for example, or you might be supplying your product into a large company that said that they want it amended in a certain way, and so they can be brought in to help with the design and refinement of that product. And then in terms of the kind of areas that it will cover, so again, there's a slight difference between capital and innovation grants. So capital will typically cover those machinery costs. They might cover a little bit of time, staff time, but it's generally quite limited. With the innovation funds, they're very much looking for a project. So what you would do there is you define, for example, a 12-month project. If we look at the top example here, £500,000 total project costs. Again, 70% of that you get back, which is a very high percentage. And you can include pretty much anything you want to in that, in terms of salaries, in terms of a little bit of capital expenditure, in terms of subcontractors and partner costs as well. But it's very much project costs. So they want to see as an output of that project, you might be prototyping, for example, and therefore you can incorporate half of your team, for example, to be working on that for that duration. And that point I mentioned earlier about looking at it like you look at an investment proposal. If there are any kind of weaknesses in your team, you can use the grant to say, actually, you know what, we're going to bring in this particular expertise at this point to solve that particular problem, because we don't need it in the company long term, but we do need to solve it in this project to make sure the project's a success.
Fantastic. And I guess just the other question, how long is the application process? Can you give us some insights into, let's just say I find an Innovate UK grant that I think is a good fit for a project I want to do. Can you kind of just give us a visualization of what that process looks like, and how long from application to money in the bank?
Yeah, absolutely. So there's an Innovate UK call at the moment, which is a smart call, which some of the audience might be aware of, which is a fairly regular call. It's sector agnostic, so it'll take in projects across any sector as long as there's innovation there. And it's run relatively regularly, typically kind of quarterly. So the next call that is coming up for the smart call has a deadline in May. And then they have an assessment period. and the results would come out in July. And then you're looking probably at starting the project in early September. So it is a kind of a 6-month period that you'll have to be planning for the start of the project. And there's a number of reasons for that. One is that they have a large number of applicants and they need to make sure that everybody's assessed in a reasonable way. But also the whole point of grant funding is to allow you to achieve something which you otherwise couldn't achieve. So it's taking those ideas, those really ambitious ideas that otherwise in a business as normal scenario you wouldn't be able to do, and it's helping you realize those. And it's those really ambitious things like the Swoop platform, for example, and being able to then achieve that. So what they want to see is that you've got a very good plan for that project. So you're going to have to define what the outputs are, what the work plan is, what the risks are, how you're going to manage it, how you're going to project manage it. And defining that in that way obviously takes a little bit of time, and that's why there's that kind of delay to the project start.
Yeah. Yeah, I would say that this is where your help comes in, because you're trying to run your business. You're trying to find, is there another way of you being able to do some ambitious research and development? So I think that's where your support comes in, not just navigating that side of it, but having that resource alongside you so you're not distracting from your everyday of having to keep your business running. I always find that when I'm on webinars myself, I love to see like a case study or something to sort of make it more relevant to me. Do you have any examples of, let's say, a company that you've worked with and how that process went?
Yeah, absolutely. So what I might do actually first, if it's okay, is just talk about an example of a company we didn't work with, just to highlight that point of how we can help out. So we visited a manufacturer who was looking at doing a capital grant. He was planning on applying to the 6th round of this particular fund, and he'd applied to all 5 of the prior rounds, and it had taken him out of his company for about a month each time, he estimated, and he hadn't been successful. And so we were coming in and saying, well, look, we can help. We've got really good success rate in this particular fund. We know how it works. In the end, he decided not to go with us, and unfortunately was unsuccessful again. So he's taken 6 months out of an MD role in a company that not only hasn't secured the funding, but actually has probably had a detrimental impact on their growth anyway. So we very much can provide that kind of extra resource within an organization to make sure that it's done properly, done once, and is successful. So the case study that was done there in terms of Play as an organization, they were established in 2013. So they're a London-based company. They span out of a number of the kind of gaming technology development companies. And they decided to set up and apply that gamification approach to organizational structuring. So they developed this system called Totem, which is a way to communicate within organizations. And what they'd noticed was that they worked with disparate kind of groups of organizations. So that might be teams, for example, within Vodafone, working in shops. And they were quite poor at solving their own problems and often felt quite isolated. So they'd use Totem to help connect those different disparate groupings of employees. But they'd noticed that they were getting some really interesting and novel data from that. And we helped them to put in an application for a SMART grant and help them to secure over 300,000 of grant, which took that Totem project that they already had and applied some very interesting artificial intelligence and machine learning layers to it. So that actually it enabled the users to identify potential people in those organizations who were potentially at risk, who turned off recently, who were struggling, and had a very strong kind of societal benefit, as well as, very strong kind of financial and efficiency gains. And the benefit of helping them with that is that then, that was in 2018. In 2020, the Innovate UK Continuity Fund was launched. And so because they'd had that original grant and had delivered it successfully, they'd kind of been pre-approved, is possibly slightly too strong, but the risk of the funder giving them further funding was greatly reduced. So therefore we were able to help them get further funding. There's a slight risk there. We don't ever, and we're very explicit about this, we don't ever want anybody to become addicted to grants, because we've seen those clients in the past whose business models don't work without grants, and that's not where we want to be. However, you can use them to augment your business growth plans, continually. The grants are continually developing, and once you've got that first one, you've got that kind of reassurance for the funder, and you can then secure further ones afterwards.
That's such a good point that you make there, Tom. I would say from our experience, having won two grant competitions, it was the funding that enabled us to go down a path that we definitely wouldn't have gone down, and actually has helped us to be relevant in our industry. But the second is there is an element of reputation. You gain a reputation because they're not easy to win, and so if you're winning, especially in the innovation space, that badge actually stands you in good stead when you go out to speak to investors or even customers. So it's got that side to it. And I guess listening to this session, there might be people who are saying this sounds very daunting. What other upsides would you say there are to actually going down the grant route?
Yeah, I think you're exactly right to identify, the most successful companies that secure grant funding realize that it's not just the funding.
Yeah.
There are really significant benefits in terms of getting you into conversations. You can actually use, that prior example that we gave of a multi-partner bid. You can use a grant application to talk to your potential customers and to get them involved. And you know what, if they work with you on a grant, they're likely to work with you after that. Yeah. There's also, but it is about going into it with open eyes. There is an element of bureaucracy about it. You do have to be aware of what that covers. You do have to be aware of the time that it takes. And you do have to be aware that not everybody is always successful. So you can't predicate your next year on absolutely getting that grant. It has to be that augmenting element. But the validation that you do get from winning one can really put your company on a different kind of level. And like you say, it helps with investors. It helps if you're going for an investment round currently, because you have to give away less of your company because grants are ultimately non-dilutive. So there's a significant number of benefits to it. It also helps you to have conversations at a level that you maybe weren't otherwise having, because you're suddenly kind of perceived as being at the cutting edge of your field, and that allows you to then have those conversations that otherwise you wouldn't have.
Yeah, absolutely, and I can definitely say we've had evidence of that ourselves. And I suppose we're in 2021, so much change going on in all of our lives. We've got Brexit, we've recovery from COVID. We have, of course, more innovation grants coming. And I suppose the upside is that there are more funds. The government seems to be really getting behind putting more funds into innovation in particular. But just in general, Tom, what should we expect from government grant funding in the year ahead, do you think?
Yeah, I think that's a really interesting. I think it comes back to, the government's ambition is to increase that percentage of GDP that is spent on research and development. And a significant proportion of that will come from grant funds. They're also, as you mentioned earlier on with the Shared Prosperity Fund, that is a way that they're plugging the gap that programs like ERDF and ESIF are leaving with our exit from the EU. So we're seeing a significant increase in grants. There will be more available and of a higher value. In terms of, there's a question that's just come into the Q&A in terms of how much those grants you're able to go for. Is there a minimum? So typically you're looking at around a kind of a 50 to 100,000 pounds as a minimum entry point for these grants. Upwards, then you're looking at 2 million, 3 million potentially. So it's a really prime spot for SMEs. And I think what we'll see is an increase in terms of those funds from organisations like UKRI, Innovate UK, that really are aimed at both the sectors in the country that need support and are part of our continued growth in a kind of a post-COVID, post-Brexit scenario, but also areas that need kind of further assistance, for example, as a result of both those issues.
Okay, great. And I guess I can see lots of questions that the audience have, which we can go through. And I guess there was some that we had come in before we started, and it was around success rates and what generally do success rates look like, and how does one go about ensuring they have a successful application? If you could just talk into that, that would be fantastic.
Yeah, of course. So again, I think it's having that investment mindset really. So as you can see on the screen, a grant application is made up of a number of different sections that you've got to make sure that you have are able to answer very strongly. You also need to be honest with yourself. Particularly this comes into areas like the team. If you don't have someone who's taken your type of proposed product to market successfully before, that will be brought up by the grant funder. So actually, rather than trying to hide it away and brush over it, be honest and say, look, we're going to call in expertise. We're going to get an advisory board set up, for example, that will help us to go to market effectively. In terms of success rates, obviously, as grants become more popular, more people want to apply. And we've seen this last year has been extremely popular for applying for grants. You know, people have had, particularly in organizations potentially that have looked at furloughing, people have had more opportunity to think about ideas that are innovative and think about those things that they otherwise couldn't have done. So we have seen success rates as a whole from kind of public applications diminish. For something like that SMART grant, you're looking at maybe 5 to 10% of applications are successful in total, which is obviously quite a low success rate. But again, that's where we can help out. Our success rate is considerably higher than that. And obviously we will help and work with the client to ensure they're putting in a strong application. But also what we're very strong at doing is helping to politely say this isn't the right fund, because there's nothing worse than wasting time and going for the wrong funding opportunity. It's much better to make sure you get your project to the right level of maturity. And then when it's at the right point, then you can look at the funds that are available then.
Great, great. And I'm just working my way through some of the questions and trying to group them together. So what I might do is group, we've quite a few on R&D, so quite a few going through R&D tax credits where they've already submitted their claims, and then they're looking at, you know, how can I go about getting a grant from there. I guess just from my perspective on the funding side, I see somebody has submitted a substantial R&D claim for about 237,000 and looking to keep things going without dipping into their shareholders' funds. I will say sometimes there's a trend, especially if it's your first claim, where HMRC will take longer. So there are lending facilities available on Swoop where we can get the funds advanced to you while you're waiting for your HMRC refund to come through. But it is around that. So I've done my R&D claim. How do I go about getting more funding in the innovation space? What would you recommend, Tom?
Yeah, so obviously the R&D, and this is sometimes can be slightly confusing when we're talking about R&D. There's two types of R&D. There's the grants, which are looking at future projects. Yes. And you can't start one of those projects until you've secured the funding. And then there's R&D tax credits, typically, which are the historical claims. And you can go back up to 3 years with those claims. Typically, if a client has secured R&D tax credits, then they're working in the right kind of area, potentially to be looking at grants. The key difference is that if you're doing an R&D tax credit claim, you're convincing effectively HMRC that you have done something that is innovative. They don't look at the competitive nature of it or the novelty of it with regards to the market. Whereas when you're looking at the grants, you're having to say, well, look, this is how we compare to competitors, and you're competing for the funding rather than convincing for the funding. And that's a subtle but important difference. In terms of things around, you know, age of a company, those kind of pieces, you know, you can be a startup and apply for grants, absolutely. So there's no requirement typically to have a minimum trading period. But again, it's about understanding the scopes of the funds and being sure about the right project for the right fund.
Yeah, actually, I was just going to touch on trading history, as you mentioned. So as you mentioned, there's no real age issue in terms of innovation funding and being pre-revenue, etc. The only time trading history really comes into play is when you're looking at the more local grants. So if you were to apply to your local growth hub for a revenue grant or a capital grant, a smaller one, they are typically looking at 2 years plus trading history. And so I guess a small nuance to mention is the ones really we're focusing on here today are the sort of the higher value, you know, in your mind you might think difficult to achieve. the more local and regional ones are around, they're smaller amounts. It might be that, you know, you want to invest in a new piece of software or build a new website, etc. And that's a more sort of straightforward process. It's like applying for a business loan, is pretty much how the growth hubs run it, and that's where trading history does come into play. And I'm just having a look here to see, just in terms of quite a few questions around, well, if I'm a UK business and I get a grant, am I able to collaborate with European companies? And can I include that within my grant application now that Brexit has happened?
Yeah, it's a really good question. And unfortunately, I can't give a black and white answer because it very much depends on the fund. So there are some funds, like, for example, Eurostars, which actively promote collaboration, and which UK SMEs are still eligible for after Brexit. Other funds require all of the work to be conducted in the UK. You can work with EU companies, but the work has to be conducted in the UK. So it's very much a question of understanding the project and then finding the right fund that does allow that kind of collaboration.
Yeah, fantastic. And just on, there's some questions around, if you come on to Swoop, should I tell you about my most ambitious plans or my bootstrap plans, etc.? And I'd say go for it. Tell us your ambitions, because what we do is we will then look to how do we build to that number that you need to get to. What funding is out there that can help you achieve it? And I'll say from our own experience, you know, we started as a tech company in 2018. And the first couple of years, it's like a patchwork quilt of how you get your funding to get you to your ambitious goals that you have set yourself in terms of technology development or whatever it is you're doing. So it's not pretty, but it's certainly out there if you know how to navigate it, and that's kind of the purpose of us existing. So yeah. Be as ambitious as you want to be, and then what we do is break that down between granted and ourselves to be able to reach that for you. Let me see, what are the questions?
Yeah, just one that's come up, if I may, on R&D tax credit and grant interplay, because it is an important point. So yeah. It's one that people often don't realize, even though they're currently claiming tax credits. You can claim tax credits for grant projects. So the match funding that you have put in, that kind of 30%, for example, of a project, you can still claim a tax credit for it. It's about making sure that both the tax credit claim and the grant application themselves have been very clearly written. So there's a strong delineation between the project that you're applying for the grant for and the rest of the company's R&D tax credit work. And as long as that delineation is fair and clear, then there's actually an opportunity to get even further higher amounts of tax credits. We've got a good examples of that, and obviously it's a case-by-case basis, but it's a very important point.
Yeah. And just some other quick points to tidy up. We don't, there's questions about, do we charge for grant applications? So what Swoop is a free platform to use. What we're returning to you are your results of what grants are available to you, what loans, etc. We don't charge for loan applications or grant applications, but if you then engage with somebody like Tom, where we would recommend you to Tom, his team will work with you and explain writing, what the writing fees are, etc. So Tom, do you just want to give a bit of a flavor of how that works and how you would reach a conclusion with anyone who's in the audience here today on whether they should move forward with a grant application?
Yeah, absolutely. And I think there's a few points. I mean, our organization has been running for over 10 years now, and the reason that we've been continuing with that is because we're kind of genuine in the way that we approach organizations and their potential projects. So there are some grant writing organizations out there that offer completely no win, no fee basis for grant applications. But typically they're looking at generating a huge amount of volume, and their business will succeed if a smaller percentage of those are successful. We're much more about taking a longer term view in that we'd like to work with you successfully on your next grant application, but also the ones after that as well. So because of that, we have a split fee model. So there's typically is an upfront element to the charge, but then normally the vast majority of the fee is only if we're successful. We mitigate that upfront fee by working entirely at risk to understand whether your project is suitable for a fund or not. So we'll work with you, we'll help architect that project, help you understand the funds it might be eligible for. But if it's not eligible for any funds, there's absolutely no charge for that. And if we reach that point where we have identified a particular fund that you want to apply to, at that point, obviously, we'd put a proposal to you based on the amount of work that we have to do, which seems a fair way of doing it. So we have a number of different options for startups where we'll do more of a review approach, to the kind of the full fat version where we'll do all of the writing and all of the submission and all of the checks ourselves. And obviously there's a gradation of fees dependent on that.
Yeah, that's great, Tom. And this comes up quite a lot as well. That is a universal theme. Most people think, grants are only for tangible products, like the wind turbine over there or the solar panels over there. Can you tell us about, grants and in terms of I'm a service or I'm a piece of software or I'm an online platform, are innovation grants a good fit for other business models other than tangible products?
Very much so, yeah. I would have said actually kind of 7-8 years ago, it would have been much more leaning towards the tangible product side of things. But I think that the funders have learned as developments like blockchain, like AI, like machine learning have come on stream. And now actually probably the proportion that have a kind of a software or service element are at least kind of half of the projects that they're funding. There is a slight danger though, in that at the moment it seems like everybody has AI. It just depends what color AI you've got in your particular piece of software. So you have to understand how it's innovative, and just using kind of fashionable terms like AI isn't enough. You have to really understand what type of artificial intelligence you're integrating into your approach. But yeah, very much so. That is one of the positive changes over the last kind of 10 years, is that the funders do appreciate that maybe some of the less tangible outcomes can still be extremely innovative.
Great. That's good to hear, because yes, I do remember when I was starting out in life, that was generally, if you didn't have a product, you wouldn't be thinking of it. But we too have noticed that ourselves, being an online platform. There's just some questions here on business growth and delivering into existing contracts. And just, yes, if you have an existing contract, then there's other forms of funding available for that. There's advance facilities. So if you can prove the contract and where you've gotten your deliverables of that, you can get advance payments on that. So that's just different types of lending products that are out there if you're trying to free up cash flow to help you get to the end of the contract. So that's where, say, something like a loan facility falls into line better than waiting to see if you win a grant. Another one, yes, we should talk about is de minimis. This infamous phrase of de minimis state aid that most people go, what does that mean? Can you talk us through that, Tom, and what that means now that we're also out of Europe, etc.? Does that still does it still matter? And if you could just sort of maybe in layman's terms help people understand what that.
Of course. So and just with a slight pinch of salt, in that it is still changing in terms of where we are with state aid, and I'm not a state aid lawyer.
Yes.
But de minimis was very much like a grant overdraft that you could tap into. So you had a set amount, which was 200,000 euros over a 3-year period. And if you used up all 200,000 within year 1 of that, you'd have to wait till year 3 for it to be eligible again. The good news is that very recently, further state aid discussions have been had, and de minimis is no longer a thing which will affect UK companies. It will be replaced by a different alternative, which will allow smaller scale grants to be given more easily. That's the whole purpose of de minimis. You don't have to go through as much bureaucracy if it's a de minimis grant. It can just be given out because it is never going to be above that threshold. So it will be replaced by a new mechanism. There's a number of other, this all comes under a term called state aid, which is effectively the amount of grants any particular company can receive, again, in layman's terms. So that schema was part of our appointment with the EU. That's now changed, so we've got a new one coming into play, but that hasn't quite been finalized, as these things are highly complex. So the good news is de minimis will no longer apply. It will be replaced by a scheme which will have a higher threshold than the current one. So it will allow more freedom for companies. There's a question in here about R&D tax credits. Tax credits don't come under de minimis. They're a separate scheme. So it shouldn't impact your de minimis allowance. And you don't have to wait 2 or 3 years to claim back tax credits. You can do it as soon as your year has finished. The point is you can go back up to 2 or 3 years for years you haven't claimed for yet, rather than having to wait to claim again.
Great, thank you for clearing that up, because yeah, so many people say I have no idea. How do I know what to include and not include in my allowance? So that's very, very useful. And as we say, it's a changing discussion at the moment, because this was one of the key points that the UK government were trying to hold on to, that they wouldn't have to follow the state aid rules moving forward. So I guess that's a watch this space one. Let me see, what other questions do we have? There was one here just briefly on social enterprise and funding that's available. I would say when looking at funding for something within your area, so I think it's a children's services home, that's where your local LEP comes into action. So depending on your location, there's 38 of them around the country. So each one has a growth hub. And that is the first point of call when you're looking for funding, whether it's for business growth or whether it's for an enterprise that you are setting up that has a community impact or has an impact on you want to hire more people. So depending on where you're based, if you just type in your location and business growth hub, it should come up. As I say, we have what the growth hubs are offering at the moment. We've collated in Swoop as well. So those change regularly. The fund will be open, and as soon as they've run out, it closes again. So we keep a track on those. They wouldn't be at the amounts, in most cases, they wouldn't be at the amounts that Tom is talking about in terms of innovation. And I guess just to tidy up a few other points that are coming in that are not grant related, there's questions on CBILS and banking with a challenger bank and not being able to get funding. I would say yes, we've got every variation of how people are trying to apply for those. We have all of the lenders on our platform, so one of our team would be more than happy to chat to you about it. And yes, we have overcome this issue in the past on the challenger bank statements, etc. Just checking to see if there's Tom, people are just asking about just general ballpark figures of fees. Is there any sort of ranges that you guys have in terms of your intervention and assistance? So for example, another person has asked, they've written their application, and so can they send that to you for a review? We've got that on one side of the scale, and then we've got on the other, we have an idea. That's what we have at the moment, and how do we formulate that into an application?
Yeah, of course. Yeah, and I think it's also pertinent to the size of the organization that you're talking about as well. For example, startups typically have less capital available, so we have options that start at the very kind of entry level in terms of those review services, etc., and where we're able to offer help. If it requires more assistance in terms of kind of architecting of the project, and I guess it's more of that innovation consulting element of it, where we're not just writing up a project and submitting it, then obviously we'll have a discussion with you at that point and see how much of our time and our consultants are necessary. We're always open to those discussions and to make sure that we find a solution that balances the fees and the amount of work that's required in a fair way, and also the risk. And that's why we do, the vast majority of our fees are predicated on success, because we will only take forward clients that we think have a very strong chance of being successful.
Fantastic, thank you. There's just another question here on a business looking for help with their pitch. I think you're probably talking about your pitch deck there, which I would say it sounds like you could be a good candidate for an accelerator program. We run funding masterclasses with various accelerator programs. I'd recommend the Virgin Step Up program, where we spend a day helping you work through building your pitch deck if that's for investment. Pitch deck is also useful for Tom and his team to get a sense of what your business is doing. So that's one quick recommendation I would make here. And sorry, I'm just reading one here. We are coming to the end of R&D, then moving on to sample production, crash testing, and on to manufacture and launch. They require 350,000. Anything coming to mind, Tom, that they should be thinking of in terms of grants that are coming up?
Yeah, I mean, it's certainly worth having a discussion. Potentially, there's a number of different areas there, and I think that's really where our expertise can help, because one project can actually be split up into different phases. For example, the sample production crash testing element is potentially still an element of R&D, although it's slightly closer to market. When you're looking at then the capital requirements behind manufacturing and the commercial requirements behind launch, that moves into much more of those kind of capital funds. So what we'd look at, and this might help hopefully everyone, is we'll look at where you're located in the country. We'll look at the type of project you're looking at doing and the various kind of cost centers within that. And it might be that you choose one particular R&D fund to do the next 6 months of development work, followed by or in conjunction with an application into a capital fund, which maybe provides more of the kind of setup for manufacture, and all the while taking note of the tax credits and those kind of elements as well.
Yeah, great, thank you. There's another one here on, does SEIS and EIS affect the grants? I know myself from our own experience, SEIS was, I don't know whether it still is, considered state aid. EIS, no, but SEIS is included. Is that correct, Tom?
Yeah, so I think without going into, we could do another kind of hour on state aid itself. The key piece to bear in mind is that whether you are SEIS or EIS, it shouldn't affect your availability to take on grants, typically, given the scale of both the investments and also the scale of the grants. Obviously, we'll do that analysis when we have that initial discussion with you, but typically it won't have an impact. It potentially has an impact the other way around. If you've secured a grant, you're looking to then become SEIS or EIS. But again, we can work through that.
Great, thank you. And just a question here on typical project sizes for more regional focused grants. So there's a general rule of thumb with the regional focused grants, and it usually is they are looking at, will the grant lead to increase in employment? So will it safeguard a job or will it lead to a new job? And then normally they have a figure attached to that. So it's normally either 5,000 per job or 10,000 per job are the usual ones you find. So when you're going to apply for a local or regional grant, they will say, will this grant help you safeguard or increase? And then they'll base the amount that they will contribute to the project based on, so if it's 2 jobs, that would be £20,000, so £10,000 per job. So that's a general rule of thumb. They also have usually maximums that they can go up to as well. So some of them will have maximum of 50% of projects. Some will say, oh, we'll do 30% of the project if it's revenue-based grant, etc. So unfortunately, there's no sort of general standard rule of thumb, but the most common one you'll find is the job linked to jobs. And it just depends on your local region. I would say there are at the moment COVID recovery grants, and most of the local growth hubs are doing those, and they can be quite substantial. So it's definitely worth checking out if you're falling into that sort of space. There's also questions coming from, I'm a startup, what's out there for startup situations. And I would say, again, going back on our own experience, we went for a a startup loan was the first thing we did when we came up with our idea for Swoop. And a startup loan is a government-backed loan, because I saw there was some others saying where we've only got 1 year's filed accounts, so can't go for a CBILS loan. So, for example, in that situation, you are still eligible for a startup loan. So if you're 2 years or younger, startup loan is you can get up to 25,000 per promoter in the business. So if you've got 2 directors or 2 founders, you can get up to £50,000, and it's 6% APR. You get 6 months capital repayment holiday. You can take 10,000 and then go for a second loan of another 10. So it's up to the 25,000. That's how we started. We built our MVP from that and then moved forward. So for those who are in that sort of bracket, over and above what Tom is talking about in terms of pre-revenue innovation funding, that's another route to look at. Just seeing, have we captured everyone's questions? There was one, Neil, you're saying, can you get a list of the grants available to you, somewhere between the 500,000 to 2.5 million? It sounds like you're doing incredibly innovative activities, and so yes, please contact us for your list, and Tom and his team would also be happy to share with you if we get more insight into what your business is doing. I also noted that your R&D claim was your first year. You're absolutely right to call us out on that. To be very, very clear, if you've submitted your R&D tax credit claim and you are experiencing delays, usually the funders within this space, the lenders within this space who advance facilities, are looking for you to have at least one successful claim with HMRC, and that would be you be on to your second one. So it is difficult to get that approved for your first one. But I would say best thing to do is absolutely keep phoning HMRC, because sometimes someone gets lost in the system. So it's worth putting the effort in. If you are waiting quite some time, it's worth putting the effort in to nudge them along. And let's see, have we missed any?
Yeah, there's just a couple in terms of kind of more on that charitable social enterprise side of things, and Startup Learning Centre, for example. Again, there are funders that will specialize in those areas that are looking for social impact. And it's while you can apply to Innovate UK and have very positive social impact, there's also another raft of kind of separate funders, as it were, that focus on those, which would obviously be very happy to talk about.
Yeah, great. And just some more on, I've done the startup loans, I still have this gap, what should I do to finish my project? I would say 2 things I would do and have done myself when I face that gap is, one, now is the time to look at, are there, especially if the SMART grant is, we have a call coming up, etc. Look and see if the innovation grant is suitable for you. The other thing I would be thinking of, it sounds like you've made progress. So this is where you start to combine, okay, I've done startup loan, I'm looking at grants that are available to me. Should I start preparing for my first investment round? And this is where SEIS would start to come into play for a company like you. You've made enough progress, you've proven or validated your idea at some level, even if it's small, then getting ready for SEIS. And for anyone there seems to be quite a few who understand SEIS, EIS, but essentially it's a tax relief scheme that the government has set up where someone who's investing in your business under SEIS, they would get to write off 50% of that investment against their personal income tax bill, and they can invest up to 100,000 as an individual. You as a company can raise 150,000 under your SEIS round, and then you can go up to I think it's now 10 million for EIS over the course of your life of your business. So that's personally where I would be looking at next, is what grants are out there and is it time to go for my investment round. If you are thinking of going for your investment round, now is a good time to be investor ready, because we are coming to the end of the tax year on April 4th. So there'll be quite a few investors who are saying, oh, I need to invest my SEIS, EIS tax allowance because high net worths particularly plan for this event. So we find that the market is extremely busy at this time, where there are investors who are acting. Sometimes it can take investors a long time to come back to you, but in this quarter, it's usually a fast decision. So that's the route I would go if I were you. Let me see. I think we've kind of captured everyone, Tom. There's a bunch of people here who would love your details. I know we're going to do a follow-on email where we can pass the details over for Tom and his team. And if there's anything else that we haven't captured that people would like answered, we can pull a little FAQ together if we think we've missed anything. But Tom, I think that's just been such an insightful hour, and thank you for demystifying what is a hard landscape to understand. And I hope everyone has gotten some value from this session and has more ideas to go away with. And good, we are finishing bang on time. I'm glad we didn't run over, and thanks for joining us this afternoon. Thanks, Tom.
Thanks, Andrea. Thank you.
Bye-bye, everyone.